Hi, everybody. This is Fred Bruin with Remax Parkside Real Estate. It is Tuesday, June 2nd, and I'd like to talk with you today about why it is a seller's market and where I think we're going with it. So let me get right to the PowerPoint slides to share with you. This first slide is marking what the levels of available inventory have been in our marketplace here in northern San Luis Obispo County. And this goes back to about June of 2006, I believe, where I started keeping track. Yeah, there you go. June 2006, we had about 1,290 homes on the market on any given day. It climbed to a high of 1,420 homes on any given day, roughly. Let's see, that's July 30 of 2007. And then you can see these peaks are years. This is also shows the seasonality of real estate. We have the most listings on the market, mid-year, and then it falls off. So each one of these little peaks represent a year, and you can see how the inventory levels have been declining for several years now and leveled out some decline to where we're at today at about 571 listings. Well, that was on May 28th there. That 528 listings represents about a 40% decline in available inventory since the high back in '07. So limited inventory, and it's been that way for quite some time. One of the ways we look at that is what we call the absorption rate. And what that is if we take the amount of available inventory on a given day, divide that by the average number of sales per month, that tells us how many months of inventory we have available on the market, how long it would take to sell those listings, how many months it would take to sell those listings if nothing else came on the market. And if anything less than 5 months of available inventory is considered a seller's market, and I've got that shaded here in blue. So anywhere from 0 to 5 months of available inventory is considered a seller's market. Anything above 6 months, 6 months and above, is considered a buyer's market. And then the area in between here from 5 to 6 months is considered a balanced market. And you can see that, I started marking it this way in January 1 of 2015. And these are monthly calculations here. Currently, we have 4.93 months of inventory. So still in a seller's market, kind of stretching toward the balanced market. I think this number is a result of the COVID-19 more than anything else. And as we climb out of this virus situation, we'll see this number of months of inventory start to decline again. And you can see that the trend line marking all of these data points shows us continuing into a seller's market. Nationally, this is the same thing, absorption, but it's just displayed a little differently. The absorption rate back in 2010 nationally, there was 8.5 months of inventory on the market. Of course, that was right in the middle of the Great Recession and the housing crash. Oversupplied back in 2010. The inventory declined significantly over the next 2 years. Well, all the way here to 2017, and we're starting to see it kind of level out and maybe even come back. Today, 4.1 months of inventory out there nationally, still a seller's market. Wall Street Journal surveyed a bunch of economists, and 85.3% of those economists believe a recovery will begin in the second half of 2020. So here we can see third quarter, 65+% believe that we're going to see the economy or GDP turn around and start posting positive numbers. 19.7 believe it's going to begin in the fourth quarter, and so on. So the majority of the economists surveyed believe that the economy is going to start turning around here very quickly. These major financial institutions are also forecasting a quick recovery here in the second half of 2020. Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo, Bank of America. Third quarter, they believe we're going to start seeing the GDP turn around and have positive numbers, and same thing with the fourth quarter, positive numbers, GDP reporting in the second half of 2020. Here in our little local market, looking at available inventory from January 1, the red line are the number of homes out there that are in escrow. The blue line are the others that are fully available, and then the green line is the total of these two numbers. So total right now, we're at about, like I said, 571 listings, signs out there on yards. We have about, what do we got? 362 fully available and 209 in escrow. What I want to point out here is that we're seeing, it was about May 1st, the market turned around coming out of the COVID-19, and we're starting to see more and more properties going into escrow. And we've got more properties coming on the market about that same time. As uncertainty goes away and we understand what we're dealing with, more people are coming on the market and offering their homes for sale. But it's not enough. As you can see, the fully available homes, it continues to decline. So there's more demand. It's absorbing that stuff that's coming on the market. That drop dead indicator that we're in a seller's market right here, just right here in our little micro market. And one more graph here. The blue is 2019, the red is 2020. This is the number of homes in escrow. We started off the year very strong. The shelter-in-place order came through on March 19th. Business came to a screeching halt. But here about May 1st, the market is turning around and we're seeing more buyers out there making offers and putting properties in escrow. And this trend will continue further out into the year. Where are home prices projected to go? Well, here we go. This is 2020, 21, and 22. The Mortgage Bankers Association sees positive property value appreciation over the next couple of years. Zelman & Associates, Fannie Mae, the National Association of Realtors, and Freddie Mac all see positive property value appreciation over the next couple of years. So to review, extremely limited inventory over several years now, combined with pent-up demand, will continue to put upward pressure on pricing. Today is a great time to sell with fewer properties to compete against for buyers' attention, and buyers with record low interest rates and improving incomes are experiencing greater purchasing power and are out looking to buy. So if you've been thinking about selling, give me a call. I'd be happy to talk to you about it and where you would fit into that picture. Okay, thanks for watching, and we'll see you the next time around.